Now I request to CA Tushar Aggarwal sir to present his presentation on interest on delayed payment of GST and wrongly availed credit, then transfer of e-cash balance in IGST and CGST among distinct person and e-invoicing with threshold limit below 10 crores with effected from 1st October 2022. Before calling him, I would like to say a few words about him. CA Tushar Aggarwal is a founder partner at Tattvam Advisor. He has a more than 10-year experience in indirect tax. He has worked for many than 8 years in Lakshmi Kumar and Sridharan as an attorney. He was deployed at the Goods and Service Tax Network for GST implementation, works closely with the government officials. He has worked extensively with the Government of India, designated in the GST returns, audit and other formats. So, CA Tusharalji, please come to take in a presentation, sir.
Thank you so much, sir. I'm just sharing my screen.
Yes, sir.
At the outset, I would like to thank Bimal sir, PHG Chamber, and all other dignitaries for inviting me. Friends, in today's session, we will be discussing namely three topics. First is changes in interest provision. Second, transfer of balance in electronic cash ledger among different GST under the same PAN. And third is e-invoicing. Coming to the first topic related to the interest provision. In this, we will discuss the amended section 50 along with the newly inserted rule 88B, which deals with manner of calculating interest on delayed payment. So both these section and rules we will study by way of various case studies. We will take certain examples. So these examples are divided into two parts. One set of examples are those examples wherein now we have clarity what to do, how much tax, how much interest has to be paid. And second set of case studies and examples are those situations wherein still there is an ambiguity on levy of interest. For example, interest on erroneous refund, interest on wrong transitional credit. So we will take all these case studies to understand the provision better. Section 50 deals with levy of interest in case the taxpayer fails to pay the tax due within the specified period. Then we have proviso to section 50 subsection 1, which deals with levy of interest in case of delayed filing of return. Whenever I file my return on delayed basis, how this interest will be levied. And then we have subsection 3, which deals with levy of interest in case of ITC wrongly availed or wrongly utilized. So let me take first case study and then come back to the provision. My first case study is, say, my July month GSTR 3B. My tax liability was 1 lakh rupees. My ITC was 40,000 rupees. And what I was supposed to pay through cash was only 60,000 rupees as tax liability. The due date of the return was 20th August 2022. And instead of 20th August, I have filed the same on 24th August 2022. So there is a delay of 4 days. The first issue is whether interest will be levied on 1 lakh rupees or 60,000 rupees. Now, proviso to section 51, which is effective from 1st July, along with rule 88B1. It is crystal clear that in case of delayed filing of returns, my tax liability will be only on that portion of tax which is paid by debiting the electronic cash ledger. So in our example, the interest will be calculated only on rupees 60,000. However, there is an exception to it. The exception is that where such return is furnished after commencement of any proceeding under section 73 or 74, then this privilege will not be available to me. So what do you mean by furnishing of return after commencement? So commencement of any proceeding under section 73 or 74. Friends, 73 or 74 deals with issuance of show cause notice. 73 non-fraud cases, 74 fraud cases. So commencement of proceeding means when a SCN has been issued under section 73 and 74. Merely because you have got a scrutiny notice under section 61 or some summon or other investigation, etc., that does not mean a proceeding has been commenced under section 73 or 74. It has to be read in the context of the way rule 88B is drafted and proviso to section 50 subsection 1 is drafted, is that there should be a show cause notice which is issued under section 73 or section 74. Accordingly, if where no SCN has been issued, I have to pay tax only on the amount of tax liability which is paid by debiting the cash ledger, that is 60,000 in our case. Moving on to the second example, missing invoices. invoice date 15 July 2022, and I was supposed to report the same in July 2022 return. I missed it, and I will report it in October 2022 return. The same has been reported in October 2022 return. There is a tax liability of 18,000 on this, 1 lakh rupees on this particular invoice. The issue is, if I have my ITC balance lying with me from July 2020 till October 2022, I have my ITC balance of 1 lakh rupees minimum maintained, but I have missed this invoice, and now I'm reporting this invoice of July 2022 in October 2022. Whether the tax will be levied? The answer is yes. The tax will be levied on the entire 1 lakh rupees amount. So in case of missing invoices, the invoices which you have missed and which you are reporting in future return period, the interest has to be paid on the total value of the tax which has been missed to be reported. Let's look at agenda of 31st GST Council meeting. Very important. The committee observed that the proposal to charge interest only on the net liability of the taxpayer after taking into account the admissible credit may be accepted in principle. The example which we discussed, what even the council said, that in case of delayed filing of return, you have to pay tax only on the net cash liability. Accordingly, the interest would be charged on the delayed payment of amount payable through the cash ledger only. However, where invoices, debit notes have been uploaded in statements pertaining to the period subsequent to the period in which they have been uploaded, the interest shall be calculated on the amount of tax calculated on the taxable value from the date on which the tax on such invoices was due. So in our example, the interest will be calculated from 21st August 2022. So in this case, the interest will be paid on the entire 1 lakh rupees from July onwards. And that's why even in Rule 88B, the second clause, if we see, it specifically says in all other cases where the interest is payable, so except case 1, in all other cases, the interest shall be calculated on the amount of tax which remains unpaid for the period starting from the date on which such tax was due till the date of payment. Moving on to the third case study. I have taken wrong input tax credit. Say April 2021, I availed 5 lakh rupees of ineligible credit, which was ineligible as per section 17, subsection 5. Now I am reversing the same in August 2022. So credit availed in April 2021, I am reversing the same in August 2022. There can be two situations. First, I have 5 lakh rupees of balance, which is maintained every month, at every point of time, from April 2021 till August 2022. Whenever at whatever date I download my credit ledger, I have balance of 5 lakh, which is maintained. In that situation, whether the interest will be leviable, the law is clear now. They have specifically substituted section 50, subsection 3 of the CGST Act, and they have specifically said that where the input tax credit has been wrongly availed and utilized, then only interest will start, and interest will start from the date of utilization. If we see Rule 88B, sub Rule 3, it also says that where interest is payable on the amount of ITC wrongly availed and utilized in accordance with subsection 3 of section 50, the interest shall be calculated on the amount of ITC wrongly availed and utilized starting from the date of utilization. So where the amount is wrongly availed but not utilized, no interest will be applicable. And how will you determine whether it is utilized or not? You have to check your credit balance. So if my credit balance from April 2021 onwards till August 2022 at every given point of time was minimum 5 lakh rupees, it means this amount has not been utilized, and accordingly no interest will be leviable. But what if my balance goes below 5 lakhs in certain months? Say I took this wrong credit in the month of April 2021, and now I have this 5 lakh rupees of balance which is being maintained, and suddenly in December 2021 my balance dropped from 5 lakhs to 1 lakh rupees. I repeat, in this December 2021 month, my balance dropped from 5 lakh to 1 lakh rupees, and thereafter again from February 2022 onwards, my balance restored to 5 lakh rupees. So credit availed April 2021, wrong availed, which I am reversing in August 2022. In between, my credit was always 5 lakh rupees, but for the 2 months, December and January, my balance was reduced. Whether I have to pay interest only for this 2 months, when the balance was reduced, or I have to pay interest from December 2021 onwards. Once my balance got reduced from December 2021 onwards till August 2022, when I'm reversing the same. If we see explanation to Rule 88B, read with Rule 88B3, it specifically says that my interest will start from the date of utilization till the date of reversal of credit or payment of tax. So it specifically says that my tax liability will start from the date of utilization till the reversal of credit. And in my case, my reversal of credit is in August 2022 month. So once your balance goes below 5 lakh rupees, the month in which your balance goes below 5 lakh rupees will be treated as the month in which this credit is utilized. And accordingly, from that day, you have to start levy the interest till the same is actually reversed. So date of utilization will be treated as a date in which your balance got reduced below the 5 lakh rupees in the month in which it got reduced. Another interesting issue which is always asked is, so what we concluded is, if I have my balance in my credit ledger, then there is no interest. If I have not utilized the ITC, no interest. Interest will start only if I utilize the ITC. There are situations wherein I am maintaining certain balance in my cash ledger and there is a delay in payment of tax, maybe on account of delay of filing of return or account of missing invoices, but I have certain balance which is maintained in my cash ledger. The fact that certain balance is in my cash ledger is of no relevance. Interest will be levied on delayed payment of returns, delayed filing of returns, or in case of missing invoices, as the case may be. The fact that you have balance in your cash ledger does not mean that no interest will be levied. So the way entire section 49 is drafted is that only once you debit it from the cash ledger, then only the tax is deemed to be paid. So till that time amount is in the cash ledger, the tax is not yet paid. So this situation is similar to what we used to have in excise regime also. There used to be a concept of PLA. So there are judgments which said that if you have amount in PLA, that does not mean that the government has got the tax. It's only when you make a debit entry, then only the tax shall be deemed to be paid. Moving on to some another interesting issues which are not yet settled by way of the changes which have been brought. Interest on erroneous refund. Let me take a case study. In 2018, 19, 19, 20, I applied for inverted duty structure refund. I applied that time. There was a confusion whether the refund of input services will be available or not. Now the Supreme Court is very much clear that the refund of input service not available. It's only input refund which is available. But at that time, I applied for input service and input refund, and I got the refund also. Now, after this Supreme Court judgments, there are a series of taxpayers who are getting notices that this refund of input services in case of inverted duty structure has been wrongly availed. The same need to be refunded back along with interest and penalty. So whenever there is a demand of erroneous refund may be of output tax, maybe of in ITC, which I have claimed, whether interest is leviable on surrender of refund. Friends, if we see the levy section of interest, section 50, it only talks about two situations. Section 50, subsection 1, it talks about levy of interest in case of short payment of tax or no payment of tax. So you are liable to pay the tax, but you have not paid the tax. That is the situation covered. Section 50, subsection 3, it talks about ITC wrongly availed and utilized. In that situation, interest will be leviable. But what about erroneous refund which have been granted and which I have to pay back? There is no provision to levy interest in such cases. Friends, it is a settled proposition that interest cannot be levied in the absence of a substantive provision for levy. We have judgments like Indian Carbon Limited, Supreme Court, JK Synthetics, etc. There are a series of judgments which provides that interest cannot be levied in the absence of a substantive provision. And the point which I want to raise and the food for thought for all of us is, when section 50 does not cater to this particular situation of levy of interest in case of erroneous refund, can department actually demand interest from me? Though in rules like 86(4)(b), etc., somewhere they have written that whenever the refund has to be surrendered back, the same has to be done along with interest and penalty. But there is no provision under which interest can be levied on erroneous refund. So to my mind, it's a good case to argue that there is no interest on surrender of erroneous refund because there is no provision, substantive provision under the law. Similarly, when we talk about interest on wrong transitional credit, I think we all are aware that department is issuing a lot of scrutiny notices and show cause notices related to the transitional credit, which have been carried forward by the taxpayer. They are analyzing all the sections and then coming out with demand that this is not the correct credit which has to be carried forward. Now, suppose I carried forward 1 crore rupees of transitional credit, out of which 30 lakh is wrong. I have to surrender back this 30 lakh rupees. So whenever you get an SCN, the law says, the SCN says, surrender back this 30 lakh rupees along with interest and penalty. The issue is whether interest is leviable on wrong transitional credit, whether there is a provision under the GST law which provides for levy of interest on wrong transitional credit. If we see section 50 subsection 3, it talks about interest has to be levied in case the input tax credit has been availed and utilized. So the word used in section 50 subsection 3 is input tax credit has been availed and utilized. And when we see input tax credit, it is defined and it actually covers what certain situation, and this situation is input tax credit means the credit of input tax, and input tax in relation to a registered person means the CGST, SGST, IGST, UGGST charged on any supply of goods or services, including GST paid under reverse charge or at the time of import, etc. So input tax credit basically cover the ITC of the GST which you have availed, and it does not cover the transitional credit which you have carried forward. I repeat, the definition of input tax credit under the GST law only covers the GST credit which you have availed and not the transitional credit. So transitional credit is different from GST credit. And if I have wrongly availed a transitional credit, if I have carried forward the SENVAT credit under the excise regime or service tax regime into GST, it's a transitional credit and it does not become input tax credit. It does not fall under the definition of input tax credit. Even if we see Rule 121, the Rule 121 only says that the amount which is credited under Rule 117, that is the transitional credit which you have availed, the proceeding can be initiated under Section 73 or 74 for any wrongly credit which is availed wholly or partly. So it only talks about initiation of proceeding under Section 73 or 74. It does not deal with levy of interest under Section 50, which is not borrowed. So to my mind, there is no provision under the GST law. I repeat, there is no provision under the GST law to levy interest on wrongly availed transitional credit. So when we talked about refund situation, when we talked about transitional credit situation, if the refund is erroneously granted, if the transitional credit is wrongly availed, no interest provision exists as of now. And accordingly, it's a good case to argue that no interest has to be paid. Moving on to another case study. Failure to make the payment within 180 days. The law says you have to pay interest. Now, if I see Rule 37, Sub-Rule 3, it says the registered person shall be liable to pay interest at the rate notified under subsection 1 of Section 50 for the period starting from the date of availment of credit on such supplies till the date when the amount is added to the output liability. So this rule says that your interest meter, in case you have availed a ITC on an invoice and you have not made payment within 180 days, you have to reverse the credit along with interest, and that interest meter will start from the date of availing credit. Whereas the amendment has been brought in Section 50 subsection 3, which says that until and unless your credit is utilized, there is no interest which can be levied. The question arises, this Rule 37 Sub-Rule 3, which is the governing section for this? Is it Section 16(2)(d) or is it Section 50? If it is Section 50, then interest cannot be levied from the date of availing the credit. It can be levied maximum from the date of utilization of credit and not availment of credit. Just food for thought. Apart from that, an aggressive argument which is still available to the taxpayers and which is not yet settled. The way entire Section 16(2)(d) and Rule 37(3) is worded, it says that if you have not paid the payment within 180 days, the same shall be added to your output tax liability. And the manner of adding to the output tax liability is by way of GSTR 2. And friends, GSTR 2 is not yet implemented in India. So the way entire Section 16(2)(d) and Rule 37(3) is worded, it says that this reversal has to be added in GSTR2. And even if you see the manner of calculation of interest, it says that the reversal of interest, the interest has to be calculated from availment till the amount has to be added in the output tax liability. But I cannot add the amount in output tax liability in GSTR2 because GSTR2 is not implemented in India. So once this entire mechanism is not implemented, this interest provision should not be imposed on the taxpayer. Just food for thought. Now, with this, let us move to our second amendment, transfer of balance in electronic cash ledger. What is available on portal as of now is within the same GSTN, within say daily GSTN number, I can transfer the amount from my CGST to SGST or from one head to another head. That is available on the online portal also. And now what is being implemented, rule 8614, is that you can transfer this amount from one GSTN to another GSTN under the same PAN. And what you can transfer is only the CGST and the IGST amount. For example, in my daily registration, I have CGST and IGST, and I want to transfer it to Maharashtra registration. Yes, I can transfer it using this facility, but it is not yet implemented on portal and will be implemented very soon. This is the law which says you can transfer the CGST and IGST from Delhi to Maharashtra. What about the SGST in Delhi? Can you transfer SGST in Delhi to Maharashtra SGST? Directly you cannot transfer, but indirectly yes, you can transfer. How you can transfer indirectly? Under this rule, firstly transfer your daily SGST to your daily CGST under this rule that is available on portal. File PMT09, transfer your daily SGST to your CGST account of Delhi only. And then under this rule, transfer your daily CGST to Maharashtra CGST, which is possible. Maybe in portal, it is expected that within 15 to 30 days, they will be implementing this provision. Lastly, very important amendment is related to the e-invoice. And now they have made mandatory for the taxpayers having aggregate turnover in any of the previous financial year. If that aggregate turnover is more than 10 crore rupees, with effect from 1st October 2022, invoice has to be followed. Earlier, it was 500 crore rupees from 1st October 2020, which eventually has now reduced to 10 crore rupees from 1st October 2022. From suppliers' perspective, they have to check if their turnover in 17, 18, 18, 19, 19, 20, 20, 21, and 21, 22, any last 5 years, if it is more than 10 crore rupees, yes, they have to implement and this from 1st October 2020. However, if the turnover was not more than 10 crore rupees in the last 5 years, then the provision will not be applicable in spite of the fact that in 2022-23, that is April 2022 onwards, your turnover is more than 10 crore rupees. That is not a determinative factor. What is the most determinative factor is the turnover of the last 5 years. So from suppliers perspective, they have to implement it for all their B2B transaction, invoices, export, debit note, credit note, etc. From recipient angle, very important. Let me take you to rule 48.4 and 48.5. Rule 48.5 says invoice issued by a person to whom rule 48.4 applies. That is person who has to issue a e-invoice. If he does not issue an e-invoice, then this will not be treated as a valid invoice. Friends, under the GST law under section 16, I can take credit only if I have a valid invoice. And rule 48.5 says that the supplier who is supposed to issue a e-invoice, but if he does not issue a e-invoice and he issues a normal invoice, that will not be treated as a valid invoice, and accordingly your ITC will be denied. So the onus is on you to check that all the suppliers who are giving invoices to you, whether they are issuing e-invoice, if it is applicable to them. So what as a recipient I have to do? I have to bifurcate my vendors into two categories. First set of categories are those categories wherein they are issuing e-invoices. So vendor category 1 issuing e-invoices. Vendor category 2 are those vendors who are not issuing e-invoices. There you need to check whether e-invoice is applicable on them or not. How can you check? You can go to the portal and in search option, you can write the GST of the vendor and the portal will show whether e-invoice is applicable or not. Or you can obtain a declaration from the vendor that e-invoice is not applicable to them. Ultimately, the onus is on you to check that a supplier who is supposed to issue an e-invoice has issued an e-invoice. Otherwise, as per rule, the way this rule is drafted, the ineligible credit will be in the hands of the recipient. So that's a practical issue being faced by all the taxpayers these days. And this 10 crore rupees turnover has to be seen pan-India wise, not GST wise. With this, I end my presentation. Thank you.
Thank you, sir, Tushar sir.